Hey everyone, it's Paul with the Bold Profits daily video for this week. So starting off, I want to start with the same warning that I started with last week, which is that there are a lot of scams that are going on out there using my name, my picture, people that are claiming to be me, people that are claiming that they will give you some magic stock pick that will instantly make you into a millionaire or a billionaire, and asking you to send money right now, or send Bitcoin right now, or somehow scam you and trying to get you to give them your money. And I can only guarantee you one thing: you will never see your money again. So we're going to try and put these warnings at the beginnings of as many videos until eventually, hopefully, these folks will stop, or at least the word gets out that this is happening, which is that people are taking my picture from social media or from Google or any other place, putting it on, and then realistically trying to say that they are me, using my name. Obviously, apparently there's somebody on Instagram doing this. There have been instances of people on Facebook doing this. There have been instances of people on Twitter doing this. And there's for sure someone in the YouTube comments that is using WhatsApp and using the names of other people, telling you to contact them. And I just want to make it clear: these are scams. These are frauds. They are trying to trick you. They are trying to take your money. Please, you should just never be sending money as a result of somebody approaching you on any social media. However compelling whatever they are claiming to give you is, I would tell you that that should never be done. And certainly we are never going to approach you through social media and ask you to send us money, because we only sell subscriptions. You would need a credit card to buy a subscription to profitsunlimited.com, which, if you want to do it, go down below. There'll be a link to profitsunlimited.com, and you can then subscribe to our flagship newsletter, which is once again called Profits Unlimited. Profitsunlimited.com will get you there. It goes for $49 to $99. It's never going to be one Bitcoin or anything like that. So that's the only way that we are ever going to approach you in terms of offering you anything or asking you to buy anything. We will never be asking you for money, because we are never money managers. We never manage money. All we do is offer a subscription to a newsletter service. All right, so with that warning out of the way, and I will try to do it as often as I can, because I continue to get complaints about this. So I want to talk today about this newsletter business that I'm in, and how we compare, say, to mutual funds and, say, financial advisors. Now, I've described in previous videos what we do, and I'm just going to do it again without going into a lot of detail. Essentially, we provide you stock picks, 12 approximately, let's say one per month. And as I mentioned earlier, it goes for, usually in year one, it's 49, and then the renewal rates are slightly higher. And there's a link below to my flagship newsletter, profitsunlimited.com. We've got something like, I don't know, 120, 130,000 subscribers approximately. So how does that compare, for example, to a mutual fund, to an ETF, to a financial advisor? And you may be thinking, like, how would I compare this, Paul? I mean, give me some way of understanding it. So let's just go very quickly to what those things are, which is that when you buy a mutual fund, you're buying into a portfolio that is managed by a person, or it's managed based on an index. In other words, on some sort of formula that's there, where they buy X amount of a certain stock and Y amount of a certain stock, and they sort of keep to that recipe. Or else there's an actual person that is managing money, buying and selling based on whatever their system might be, or whatever way that they have decided to make decisions around. An ETF, for the most part, is largely based around, again, some sort of an index, or else it's thematic. It can be based on robotics. It can be based on cloud computing. And now they essentially just come up with a group of stocks that belong to a certain industry sector, and those are an ETF. And then there's also broad ETFs for indices that are well known, like the S&P 500 or the NASDAQ 100, others. The primary difference between a mutual fund and an ETF is that mutual funds tend to be more expensive. and ETFs, especially the ones that are associated with indices, tend to be a little bit tend to be cheaper. Now, the last category is a financial advisor. And just to make it clear, we are not financial advisors. Financial advisors are licensed by each state, and they are officially licensed to give you financial advice. In other words, they actually look at your particular financial situation, your particular financial needs, whatever your risk level is, and try to come up with a financial plan based on that. So we, in terms of in the investment newsletters, being that we largely provide stock picks, we have no idea of what your particular financial situation is, what your income is. Maybe you're in retirement, maybe you're young, maybe you're older. Your particular financial situation is known to you only. And that means how you use our information is going to vary relative to your situation. Having a financial advisor means that someone is listening to you and customizing a financial plan based on your particular needs. All right, so how do we fit in? Well, we provide you with stock picks, and at least at Profits Unlimited, we also provide you with general guidance in terms of how to use the stock picks. And if you go back, I believe it was a couple of weeks ago, you'll see that I made a video on rules of the game. In other words, how you should go about using the ideas that we present to you in Profits Unlimited. And we have chosen to laser focus on the fourth industrial revolution, America 2.0, as we call it, because we believe that ultimately the old version of the world, if you will, America 1.0, as we like to refer to it, is in decline and is going to pass away. And that any investments in it will ultimately, I like to say, the destination is certain, however, which is zero, only the speed is unknown. And that is based on reading a history. Most old companies, once their products and services are no longer desired, they rarely make the jump to the next level. And so they tend to fade away and end up going to zero. And you can see that in any number of books where you'll see that old companies, for the most part, never seem to really last very long. All right, so that's our focus. And then there's the question of, well, how much money should you put into it? How big a part of your portfolio should it be? And these are all questions that you would have to determine for yourself. A lot of these companies that we focus on in Profits Unlimited, they are growth stocks. These are companies that are relatively young. They have a investor base that is still somewhat uncertain as to what the prospects are. And so during periods of uncertainty, people sell them off in a big way. And we just went through a period of that a couple of weeks ago from sort of mid-February. And for the few weeks after, until quite recently, a lot of these stocks were being sold. And many people were suggesting that it was the end of that market. We disagree. We are still laser focused on these fourth industrial revolution stocks, America 2.0 stocks, because we believe the future belongs to them. So if you're interested in those kinds of stocks, check into Profits Unlimited below. Now, the last aspect of comparing mutual funds, ETFs, financial advisors, obviously we have this laser focus, and you can get that to some extent in a mutual fund by selecting a technology fund or a thematic fund, and the same thing with ETFs. Financial advisors will generally guide you to a much broader exposure. They may even include things like cash and bonds and other things. However, the really big difference between us and them, if you want to look at it, is cost. Most mutual funds will charge you something like 1 or maybe even 2%. An ETF will charge you something like about, if it's a very cheap ETF, it may be very, very small. Nonetheless, the ETFs that would give you exposure to our kinds of companies, America 2.0, fourth industrial revolution companies, they will charge you nearly 1% or so, maybe even higher. And financial advisors will also charge you something in the range of, depending on what services they are offering you, anywhere from 1% to 2%. Now, many people think that this 1 or 2% or even 0.5% is no big deal. And when this is really where our industry, we shine. In other words, if you're thinking about Profits Unlimited, We've been in operation for nearly 5 years now. We began on June 1st, 2016. And based on our tracking, and we have had this check, we are annualizing, our portfolio is annualizing at something like 30%. Now, it is quite volatile and people would consider it quite risky. However, it has done nearly double of the S&P 500. So it has done significantly better. However, the critical factor in comparing us to a mutual fund that maybe even has done the same thing is cost. We at most might charge you $49, maybe $99 per year. They charge you 2%. I just want to show you this chart, which actually I've taken from a company called Vanguard that runs a scenario where it says, imagine you have $100,000 invested, and imagine if the account earned 6% a year for the next 25 years. And we know these are just, situations. Think about, people will say, well, I don't have 100,000 and I made 50% just last year and I don't have 25 years. Please just go with the example, with the idea that it's just intended to illustrate the impact of fees versus what we do and what I do with Profits Unlimited. So, in this scenario, if you had no costs or fees, you'd end up with about $430,000. If, on the other hand, you paid a 2% fee a year in costs, after 25 years, you'd only have about $260,000. In other words, if you start with $100,000, you have no fees, you end up with a total of $430,000. However, if you're paying fees of 2%, which seems quite small, you actually end up giving $160,000 of $330,000 of earnings that belongs to you to the folks that are giving you financial advice, or people that run the ETFs or the mutual funds. And obviously you can do this example with different amounts of the fee, different amounts of what you're starting with, and vary the number of years. Nonetheless, you can see the longer you are paying a fairly high fee or even a small fee, the bigger the impact in terms of what you ultimately take home. And obviously, if you're using, let's say, Profits Unlimited like a portfolio, and you're investing in it equal weighted, as we like to suggest that people use it, you're annualizing at something like 30%. And if you're paying $50 a year, $100 a year, you're pretty much keeping all of the gains for yourself. So obviously this is illustrative, and our performance there, just like with any mutual fund or ETF or any financial advisor, there's, past performance is no guarantee of the future. Nonetheless, we have done very well, and we do it very, very cheaply. And that is what, in my judgment, really separates us from the mutual fund or ETF financial advisory business, which is that we are very cheap. You can think of us as sort of being IKEA to a fancy furniture maker. With IKEA, you go and you buy it and you got to put it together yourself. There's a bit of work that you need to do. And that is what we do. We sort of give you the ideas. We give you the basic tools, how you can sort of start to use those ideas in a way so as to be able to help you. However, there is work that you have to do yourself. Whereas if you go with a financial advisor or a mutual fund, et cetera, they are doing some of the work for you. However, in exchange, as you can see from the chart that I put up, those costs can really eat away at your investments. So this sounds like a giant ad, and I get it. Nonetheless, there is a point to be made. In other words, the existing financial industry is pretty expensive, and we are pretty cheap. Second, the existing financial industry, while they do many things for you and charge you for it, there's also an element of lack of control and understanding, in the sense that people who know finance obviously know more than the people who are giving their money to people. So by actually keeping more control, I believe that's actually good for you, being that money is something that is important for all of us. All right, so please, no trolling me for telling you about this business. It's a genuine advantage. It is real. I understand that people may say that, well, this is a giant advertisement for you and Profits Unlimited. Yep, absolutely, guilty as charged. Nonetheless, it is a quite sizable difference, and our portfolio has continued to do quite well. And I believe if we were to do a similar analysis and compare what it costs to run a portfolio on the basis of, say, something like Profits Unlimited versus a mutual fund or an ETF that's following a similar strategy, I believe that you would find you are keeping the vast majority of your earnings for yourself. That's the bottom line. All right, that's all that I have to offer for this week. If you like the content on this channel, please subscribe to us, give us a thumbs up, and comment below. Maybe you have seen, maybe you are invested in Profits Unlimited, and you can compare it to some portfolio that is comparable. Do you see more? Are you seeing more of the earnings as a result of it? So that's the question. Comment below. All right, and I'll have another video for you next week. Until then, this is Paul saying bye.